Hello, welcome to WAGMI. Glad to have you here for another episode. Inflation is soaring and national debts are spiraling to unprecedented levels. Around the world, people are searching for ways to shield their wealth from devaluation. Bitcoin has gained attention as a hedge against inflation, with its finite supply of 21 million coins setting it apart from fiat currencies, which governments can print in virtually unlimited quantities. This scarcity has led many to consider Bitcoin an inflation-resistant asset, a modern alternative to traditional safe havens like gold or Treasury bonds. In this series, we'll explore Bitcoin's strengths and limitations as an inflation hedge and its potential role in a debt-ridden, inflation-prone global economy. Before diving deeper into Bitcoin, we must first understand inflation and why it's such a critical issue for both Bitcoin and traditional currencies. Inflation erodes the purchasing power of money, meaning the same amount buys less over time. This decrease in value is often driven by increased demand for goods or an expanding money supply. The COVID-19 pandemic saw governments injecting over $10 trillion into the global economy, sparking inflation worldwide.
At the supermarket, the petrol station and the local cafe, the cost of everyday items is rising sharply across the United States, and ordinary Americans have noticed.
Everything that we need, coffee cups, coffee, sugar, milk, everything is a lot more expensive. Everything is inflated.
The US Consumer Price Index rose by 6.8% in the 12 months to November, the sharpest year-on-year increase in almost 40 years. A broad range of sectors are affected. Bacon prices are up by 21%, eggs up 8%, while petrol has jumped by nearly 60%.
It's a real bump in the road. It does affect families. When you walk in the grocery store and you're paying more for whatever you're purchasing, it matters.
Central banks generally target a modest inflation rate of about 2% to keep economies balanced. But when inflation rises rapidly, people's purchasing power takes a hit. For those seeking to preserve value, inflation raises the appeal of assets with limited supply, like Bitcoin, which contrasts with fiat money that can be created endlessly. With a growing perception of fiat currency's limitations, assets like Bitcoin are seen as hedges against the devaluation that inflation brings. Another key element in this picture is global debt. To maintain economic stability, many governments have accrued record levels of debt. In the US alone, national debt now exceeds $30 trillion.
U.S. government debt is now the highest in history. The last time U.S. debt was this much was during World War II, when military spending hit record highs. It's now more than $34 trillion, and that number keeps climbing. Our debt could balloon past the point of no return in 20 years, according to some experts, and it could send the biggest economy in the world into a financial crisis. So how do we get out of this? And what happens if we can't?
To sustain this debt, governments often rely on printing more money, which over time tends to increase inflation. When debt levels become unmanageable, central banks face a difficult choice: raise interest rates to control inflation or print more money to cover debt, each of which can drive inflation further. In these conditions, fiat currency loses value, and inflation becomes harder to control. Some experts suggest that a prolonged debt crisis could drive more people toward Bitcoin. Unlike fiat, Bitcoin's supply is capped, making it a finite, decentralized alternative. For many, the global debt crisis could set the stage for Bitcoin's appreciation as more individuals and institutions search for stable assets. While Bitcoin's fixed supply provides a theoretical defense against inflation, its market behavior reveals a more complex story. Bitcoin's price volatility and correlation with traditional markets challenge its role as a straightforward inflation hedge. Despite its limited supply, Bitcoin has seen dramatic price swings, often reacting to economic events much like riskier assets do. During periods of high inflation and rising interest rates, investors sometimes sell off volatile assets, including Bitcoin, to reduce risk. Moreover, while Bitcoin's supply is capped, it still faces a form of inflation through its mining process. However, Bitcoin's inflation rate declines over time, with each halving event occurring roughly every 4 years. As fewer coins are created, Bitcoin becomes scarcer, which could support its value as a finite asset. Yet questions remain about whether Bitcoin's current volatility will stabilize enough for it to serve as a reliable store of value. Bitcoin's decentralized nature, capped supply, and rising acceptance have led some to view it as a unique hedge in an inflationary debt-laden world. Unlike Treasury bonds or other traditional assets, Bitcoin is unaffected by central bank policies, making it an attractive option for those wary of fiat devaluation. As confidence in fiat weakens, Bitcoin's scarcity could drive value for those seeking alternatives to traditional stores of wealth. However, for Bitcoin to become a mainstream inflation hedge, its volatility must decrease, and it must offer more stable value retention over time. Bitcoin may not replace fiat currency soon, but its role as an alternative store of value is likely to expand. With global debt on the rise and inflation persisting, Bitcoin might move from a speculative asset to a genuine haven for value in uncertain times. Bitcoin, inflation, and the debt crisis are intertwined forces shaping the future of finance. As central banks confront mounting debt and inflation, Bitcoin's relevance as an independent asset may continue to grow. Whether it evolves into a mainstream inflation hedge or remains volatile and speculative, Bitcoin has redefined how people perceive money, value, and financial freedom in the 21st century. The story of Bitcoin's rise is not just about technology, it's about how we adapt to a changing financial landscape. Thanks for tuning into WAGMI. Don't forget to like, share, and explore our other episodes. Catch you on the next episode. Have an amazing day.